Now, I'll give a really good example. A200, which a lot of people are familiar with, that's our broad Australian passive ETF. That's 0.07%. So it's a very, very small fraction of what you might be paying an active manager to build a portfolio for you.
Welcome to Get Started Investing ETF Deep Dive. In this bonus series, we're going to be exploring everything there is to know about exchange-traded funds or ETFs so that you can feel confident to start your investing journey. This series is proudly supported by BetaShares, and we've brought in some of their experts to break it all down for you. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How's it going, bro?
I'm very good, Bryce. I'm loving this mini-series so far.
Yes.
ETFs, definitely one of the hottest topics in the Equity Mates community. We had Ellie on last time to break down the basics of ETFs, what it means. And now I'm really excited to get into this one. What are the actual options out there? What can you invest in?
And to help us through it, we have one of the experts from BetaShares, Adam O'Connor. Adam, welcome.
Thanks for having me, gents.
So in this episode, as Ren said, we are going to be walking through what are your ETF options. As we said at the start of the show, thousands of options worldwide. We'll kind of dig into a couple of them here in Australia. But for those of the audience who haven't listened to our first episode with you a couple of years ago, I think it was, where we spoke hack and all sorts of wonderful things.
A little while ago now.
Got me very excited about ETFs, that conversation, I got to say. So hoping to repeat the magic again today.
Can you just do a quick intro, a bit about your background, and then we can kick into it?
Yeah, sure. So basically, my title at BetaShares, I'm involved in capital markets and advisor services. So a couple of different roles there. I deal a lot with trading and execution for large ETF trades. And, on the other side, day to day, I deal primarily with financial advisors and brokers around Australia, talking with them around ETF options and what they're doing in their portfolios and trying to maybe see if we can, fit in there and how our products might fit with their clients.
Awesome. So the perfect person to have in to walk us through all the products available in the ETF landscape. So I guess let's start at the start. Why do you think an investor would choose to include ETFs in their portfolio? Perhaps some of the pros and cons of ETFs compared to other investing options that are out there?
I think the primary reason for using an ETF and why they've got so popular over recent years is firstly diversification. Basically diversification is simply about, not putting all your eggs in one basket, for want of a better term. You hear that analogy come up all the time, but it's so important. An ETF is just a really easy way to get a large basket of assets. And there's a whole range of different ETFs across different assets. You can also get ETFs of ETFs, but the core thing is, you're not just buying a single stock or a single bond.
Yeah, nice.
The other reason, which is, why investors in Australia have really gravitated towards them, is access. So, ETFs give you a really easy way to access markets and asset classes that you might not have even previously had access to or had any idea of how to do it. You can go and get a gold ETF. We have a gold ETF that, holds physical gold in vault on behalf of unit holders.
Where's the vault?
It's in London, probably under armed guard, but yeah, that's where they keep it all.
Nice.
But no, it's at BetaShares.
Yeah.
50 Market Street, Sydney, level 11. It's access or things like India. I wouldn't have even told you how I would have gone about and bought an Indian equity before we launched our India ETF, right? And I'm in the industry. So it's giving investors and investors who are just starting out easy ways to access different markets, access different asset classes, and do it in a way that's diversified.
So diversification, not putting all your eggs in one basket, access, and then there's probably one more that we should cover off here, which is cost or fees.
Yeah, sure. Yeah. That's probably a made one and probably remiss of me not to have covered that first. But ultimately, ETFs versus your traditional, active managed funds. You can have active ETFs, but the ETF that, most of your listeners who are starting out would probably be familiar with is the low-cost broad equities ETF. And one of the reasons they got so popular in the first place and why they continue to get more and more popular is they're giving investors a way to access and build a portfolio where you're not having to pay a professional manager to run that for you. And I don't need to go into, all the data and research that's gone into, buying the market, buying the whole market, passive investing and doing it and controlling costs. It's an easy way for them to do that and then build a low-cost portfolio.
So just for people who hear that term, ETFs are low cost and don't really understand what that means, can you put into context like the cost of an ETF compared to some of those other funds?
Yeah, exactly. So you might, you mentioned before that the actively managed fund might be, say, 1%. So that's charging you, on your total portfolio, you have to pay 1% a year of that to that manager to run that. Now, I'll give a really good example. A200, which a lot of people are familiar with, that's our broad Australian passive ETF. That's 0.07%. So it's a very, very small fraction of what you might be paying an active manager to build a portfolio for you.
Yeah, nice. And I guess the key message for that is that if you're investing over a long period of time, that 1% year after year after year adds up, and then that 0.07%. The difference between the two is quite significant over a 40-year period.
Exactly. I mean, there's a lot of people out there that, believe from an investment standpoint that one of the only things you can control is cost. So if you want to build wealth and compound that over time, the best way to do that is to control the costs of your portfolio.
Well, the number one Equity Mates policy is we hate fees, and that's exactly why, because you can control it and it makes a difference. Yeah.
So, Adam, you've gone through a list of the pros there. Are there any sort of high-level cons of ETFs that we should sort of be aware of when we're sort of looking at the ETF versus individual stocks?
I mean, I definitely wouldn't say there's cons, but there's definitely things for people to be conscious of when they're investing in an ETF, and things we're always reminding people. It's like when you are investing, know what you're investing in. Understand what the index or the ETF is trying to do. And we always say, know what sort of outcomes you're trying to achieve. So, the kind of ETF or fund that, someone who's, more elderly, retired and really trying to protect their wealth, the kind of fund that they're going to look to invest in is going to be very different from, something that maybe, you or I might look towards. And that's probably the key things to be aware of, is just look under the hood of the ETF and know what you're investing in.
Now, ETFs have been increasingly popular in the Equity Mates community for a number of years, but also just more broadly in Australia and actually around the world. Before we get stuck into some of the major options, can you just give us, I guess, an overview of the ETF landscape? How many ETF products are out there and how's it been growing and stuff like that?
It's a big landscape.
It is.
No, look, I think the numbers, there's around 230 in Australia now. Now, to put that in perspective, I mean, there's thousands in the US.
Yeah.
In the US, they close more ETFs per year than we have listed on their exchange, right? So it's a big universe. And, we're trying to build that out. That's one thing, BetaShares and there's other ETF providers similar to us that have really tried to build out the menu that's available for Australian investors. But, we're by no means at the point where they are at in the US, where, you could get cruise liner ETFs and very, very sort of niche type solar ETFs. They can get quite niche because it's such a bigger addressable market. So in Australia, we have 230 ETFs now, and I mentioned before that they range across asset classes. Now, an asset class can either be, equities and stocks. It can be bonds. It can be gold, like I mentioned before. It can even be currencies, or commodities like energy. So, I guess the main ones in equities, you've then got Australian equities. You've got you can get mid-cap equities, and then you can get US tech sectors like cybersecurity and robotics. regions like Asia. So it's quite broad in what you can access through the ETF.
230 odd ETFs available. We had a question come in from our audience that sort of alluded to the fact that choosing between all the ETF options that are out there almost feels like picking stocks. You know, there are so many options that it can be difficult to say of all the indexes or ETFs that follow the top 200 in Australia, how do I actually distinguish between which one is right for me? So I guess if you're building a portfolio of ETFs, how should we think about the ETF process of discovery and distinguishing between, you know, you mentioned there's the, you know, the thematics, there's the, you know, US top 500. How do you sort of think about that process?
Starting out and sort of building your first portfolio, I mean, you can start really simple. You can just think, hey, look, I've got $1,000 to invest here, and you can get an ETF of ETFs. So
Meta.
you can look at you can start really high level and say, you know what, I just want to invest. How old am I? How long have I got to invest? I might just buy a high growth ETF of ETFs, and that's going to tell you that, you know, it's broadly looking like a portfolio should. It's going to be mostly equity. It's going to have Australian stocks, international stocks, and it's going to have a little bit of bonds in it. Now, your next level, you can start to look at, you know, do I want the broad Australian market, which is what, you know, you sort of would look at under the hood of an ETF of ETFs, and you can go, you know, I can get A200, I can look at, you know, the US market via the S&P 500. And then your next step is, and that's one of the beauties of ETFs, you can say it's like picking an individual stock. It can be to an extent, but what an ETF can give you the ability to do is, say you wanted to buy Asian technology, for example. You were like, oh, you know, I really want to get a piece of what Tencent and Alibaba are doing, but you have no ability to do fundamental analysis on which one to pick. Well, you can go and buy an ETF that gives you a lot of exposure to that sector. And it says, you know, do I see cybersecurity, for example, is another one. Do I see cybersecurity being a more meaningful expenditure for businesses in a decade's time? Yeah, I do. That industry is probably going to grow. I have no ability to pick which individual stock I want to invest in, so I can go and use the ETF as a vehicle to invest in the whole sector. And it's that, you know, rising tide lifts all boats theory. And, you know, another analogy, you know, buy the dartboard, don't throw the darts.
So, Adam, it feels like, and this is why I like ETFs, I'm sure Ren and a lot of our community, that you don't have to be in the detail company by company to start investing with ETFs. You can really just identify where you generally think the economy is going to go, or a particular thematic, be it tech you mentioned, or, you know, marijuana industry or healthcare, whatever it may be, and get broad exposure that way, which takes a lot of the pain, I guess, and uncertainty for a beginner investor. But if you were to have three ETFs that all give access to the Australian top 200 companies, and this is something that a lot of our investors face, very sort of high level, how do you distinguish between which one you should be going for?
Yeah, I mean, I can understand it can be quite a daunting task for someone who's just starting out. You know, you can go to the fund webpage and have a look at the different underlying. So each one will show their top 10 holdings. It'll also show what's called an index methodology, which says, what does that fund track? What does it invest in? Now, using broad Australia as an example, you'll have, you know, our Australia 200 by market cap. You can have the S&P ASX 200 by market capitalisation. So that means they hold the biggest stocks in weighting by their size. Now, broadly speaking, they are going to be very similar. Another thing you can look at, which is probably also key, is look at the performance of them over 1, 3, 5 years. You'll find they're very similar. So what does that leave you with? How much does it cost?
Fees. Yeah.
So, you know, comparing broad market exposures can be quite what's the word I'm looking for? They can be very similar if you're looking at broad market, and, you know, then cost becomes the biggest factor.
And for people who want to find cost, where should they be looking?
it's going to be on the fund webpage.
I think that's going to be a theme across all 3 of these episodes. The fund webpage is
honestly, it's your best resource. If you're doing this on your own, I'm telling you, the things you got to look at on the fund webpage, you can look at the index, what it tracks, look at the top 10, look at the long-term performance, and look at the cost.
Yeah, and the cost, you'll see it expressed as management fee, management expense ratio. I'm sure there's other terms that I'm not using, but different fund managers will use different terms, but they all just mean the management fee, and it will be expressed as a percentage.
They mean the amount that's coming out, and it's always expressed in an annual figure.
So that's really the key here is if you're comparing the same ETF across providers, really the determining factor is going to be your fees.
And just while we're on the matter of fees, we get this question a lot, particularly from investors starting out. It doesn't mean you have to send in a check at the end of the year for what that is. It comes out.
Really? I've been doing that.
Well, I'm very much in arrears with my fees if that's the case.
It comes out daily.
Yeah. You don't have to do anything. It's all done by, BetaShares or Vanguard or whoever. So I do want to pick up on one thing there, because when we're talking about broad markets, so like the biggest 200 companies in Australia, the holdings are all going to be pretty similar. The biggest 200 companies are the biggest 200 companies.
Very much so.
When we're talking about thematic ETFs or other types of ETFs, let's say there's a couple of different cybersecurity ETFs out there. Is it the same, or is there something else we have to think about?
No, this is where it starts to become really interesting and a bit more intricate. You probably have to do a bit of due diligence on what you're actually buying. This is where you start to go down this level of investing and start to look at sectors. It becomes important to look under the hood, and without ending up down a rabbit hole too much on this, you go away from broad market capitalization indexes. And then you get to what we'd call maybe smart beta. And a lot of the thematics are based on that. And that's where you start to use things like you look at how they weight their stocks, how they weight their underlying holdings, how many companies are in the index, and things like how do they get to the companies that are included in the index as well. So, what percentage of their revenues have to be derived from that particular sector. You look at things like robotics. That's a really interesting one. It's, there's debate and different indexes on that. And it's like, are you only including pure play robotics and AI companies, or are you including companies that have a very small portion of their business involved in AI, when really it's not really a meaningful part of their ultimate, revenue streams. So, that's where you start to have to look and know what you're investing in.
Yeah. And just for people who are now thinking about their robotics ETF or their cybersecurity ETF and wondering, what am I actually investing in? Is it the same answer as before? Go to the website and you can see it all there?
Yeah, very much so. And I mean, you don't have to get tied down to it. You can go down when you're comparing two against one another, and ultimately you can probably run yourself around in circles. The reality is, understand what you're investing in. But for most of the sector ETFs, they're probably going to give you the exposure that you're looking for.
Yeah.
Yeah.
I think for me, speaking personally, if I'm investing in like a tech ETF, I'm not going to get worried if it's got 5% Apple or 7% Apple. Either way, it's got Apple. That's the main thing. The only thing that would get me concerned if I was looking at a tech ETF and like Microsoft and Apple just weren't in there. Like if there's companies that I want some exposure to and they're not there, then it's like, well, maybe this isn't the ETF for me. But, for cybersecurity, it's not in my circle of competence. I don't know these companies well enough to know which ones should and shouldn't be in there. There's people smarter than me building that index.
Yeah, there is an element of, hey, look, this is a reputable fund manager running this. There's a lot of money invested in it. There's an element of trust that the manager sort of knows what they're doing in terms of building or tracking an index and building an index effectively with the index provider.
So access was something that you mentioned, Adam, as being one of the pros of ETFs, access to different asset classes, access to different countries around the world. Without getting into the technicalities of tax and that sort of stuff, as a beginner investor, do I need to if there's an ETF that's going to give me access to India, is there anything different that I need to do from a trading point of view, or is it all packaged up by the provider?
No, not at all. It's packaged up by a provider, and that's the real beauty of it. That's really one of the key benefits of an ETF.
Nice.
Is that there are some considerations without going down the tax side of things, but from trading, execution, and access perspective, you can just trade it on the ASX like you would any other stock listed on the ASX.
So we'll get a bit more into the tax implications of ETFs and how people should think about that in the next episode. So everyone should stay tuned for that, although they're all going to be released at the same time. So just listen to that next. So I think we've touched on a number of elements. I guess I might just want to pause here and get you to sort of sum up the options that we have available. So we sort of talked about there's a bunch of different asset classes and then a bunch of different countries and stuff. I guess if you in sort of 25 words or less, I guess if you were summing up everything that was available, how would you do that?
Sum up everything that's available in 25 words or less. Okay. So you have a range of ETFs available over Australian equities, international regions, sectors, bonds, currencies, and commodities. Underlying that are things where you can look at just the US market as the US market, or you can look at something like the NASDAQ 100, which is going to have a much bigger technology tilt to it, or you can look at something like an ETF we have listing on Friday, which is an S&P 500 equal weighting. So then you can look at different ways to construct your portfolio.
So basically, any country, any investable asset class, except cryptocurrency, or any investing theme that you want to invest in, there's probably an ETF out there for you.
That's probably the way. If you're thinking about investing in something, chances are there's an ETF for that.
Chances are BetaShares or Vanguard or some of the other ETF providers have already had that thought and have built a product for it.
So to sum it up in less than 10 words, there's an ETF for that.
Google whatever your craziest idea is with ETF after it, something will be there.
Yeah. And if we don't have it, feel free to email us.
Wait, what's your personal email? We'll give it out on the show.
So, Adam, everything that we've sort of touched on in terms of the way that ETFs are following an index and managed is that sort of buzzword passive ETF, passive management. The other buzzword that beginners will come across when doing some research into ETFs is active management or an active ETF. Broadly, what is the difference between the two?
Yeah, sure. So, I mean, broadly speaking, what people should understand from the outset is the ETF is really just a way to, buy and sell. It's a structure. So it's really a way to buy and sell your position in a fund. So the fund is exchange traded, as opposed to the way they were in the past, where you used to have to, fill out a form, write it in, and send it to a fund manager. So the original ETFs were passive. So they're the ones we were talking about that broadly track an index. They buy the whole lot, biggest companies to smallest companies, and they tend to be lower cost. Now, an active ETF is a newer form of ETF, and it's definitely growing. But what that is it's a way to get access to those actively managed funds where previously you only had to write in and had to fill out the form and send it to the manager. It's a way to get access to those in a really easy way where you just trade the units like you would trade a passive ETF. And now the active ETF is different because instead of just, tracking, the index largest stock to smallest stock, what you have is a professional manager on the end making decisions on what to buy and sell for you.
That's the key there, is that, your active is literally someone actively managing the shares and the companies that are within that. Passive, they are just buying all 200 and letting it do its thing.
And without going too far into it, oftentimes there are, we talk about asset classes. There are asset classes where we genuinely believe that, active management is necessary. So, hybrids, for example. Now, we won't go into what a hybrid is, but our hybrids fund is extremely popular, and, that is actively managed because we think that it needs an active manager for that asset class because it is more complex than just buying the equities market. So that's where it can be necessary.
Yep.
And then you have some other active, equities funds where, some people believe that it's a good manager, so they're worth the extra fee.
We think they're worth the extra fee in some instances.
So, Adam, we said before that there's plenty of options out there. If people have had an idea about an investing theme or an investing idea, there's probably an ETF that tracks it. We've sort of put that to the test a little bit. We've created a bit of a game. We found some of the most obscure ETFs. None of these are BetaShares examples, so they're not products that you work with. We've got some real ones, and then we've made up some fake ones, and we want to test your knowledge.
We'd be in trouble if I didn't know real.
Yeah.
I mean, I know we've got a lot of them, and it's hard to keep track. But
so you up for playing?
Yeah, 100%.
All right, let's do it. So we'll start at home. First one, Australian retail ETF, real or fake?
Fake.
He's good. He's very good.
He is good. Obesity ETF, SLIM.
What?
SLIM.
That's
Slim
the
is the
ticker.
ticker. Is the ticker.
Fake.
It's real.
It's real. Yeah. Female leaders ETF, at ticker WMN.
Fake.
It's
Nice.
fake.
Space ETF, ticker is UFO.
Fake.
Real.
Real.
Why do I just keep throwing fake out?
A millennials thematic ETF, ticker MILN.
Real.
It is
Yes.
real.
Yeah,
Yeah.
it sounds real. That sounds legitimate enough.
International football ticker, FIFA.
Fake.
Fake.
It
I'm not
is
sure.
fake.
I'm not sure FIFA would license themselves.
No.
for an
True.
index code.
He's good.
A forensic accounting ETF, ticker FLAG, flag.
I'm going to say real because that ticker's poor.
It is real.
It is real.
Wait, you're not a fan of that ticker?
I don't know. Flag for forensic accounting.
Yeah, I guess
that
it's
could
like,
have been better
it's like
than that.
red flag sort of
Yeah.
thing.
I
Yeah.
would have done CSI or something.
Oh, not bad. That's why you paid the big bucks.
Classic accounting move. Credit Suisse merger arbitrage liquid ETN. It's New York Stock Exchange CSMA.
Are we still playing real or fake?
Well, you
Yeah.
still are, yeah.
Well,
sorry.
I'm going to say real because that is way too convoluted to have made up. So
Do you know what, from that name, would you have any idea what they do?
I forgot what the name
Credit,
was.
Credit Suisse merger arbitrage liquid ETN. I think it's going to be too
I think
complicated.
it's- I think it's like when
if
a
you were
merger's
buying,
announced,
if you were,
yeah.
if you're buying companies in anticipation of a merger,
Yeah,
or
yeah.
prior
Because there's
to,
always a
but
little bit of a price gap.
maybe,
Yeah.
but that's really odd.
Anyway, that's
Anyway.
not something for beginners. You can live a long and happy life without ever investing in that ETF.
Yeah,
So, Adam, just to close out the conversation around what our options are, again, when people are doing research, especially for international stocks, well, it would only be for international ETFs, they're going to come across a word, hedged or unhedged. Are you able to give a pretty basic definition of what that actually would mean, and should it be something you consider as a beginner investor?
yeah. Easiest way to understand hedged versus unhedged. If you buy an unhedged, which is anything that doesn't have currency hedged in it, what you've got to understand is if you're buying, I'll use US. If you're buying, the S&P 500, or you're buying NDQ, the NASDAQ, what you're also buying is that equivalent dollar value in US dollars.
Yes.
So there's going to be two things that influence your return. It's the performance of the equities and it's the currency. What currency hedging does is it takes that second asset class out of consideration. Now, a lot of people prefer unhedged. The unhedged products actually tend to be the bigger products. where we'd use hedged versions, well, we have hedged and unhedged, but where specifically often we do use hedged is for some of those sector ETFs we were talking to before, like our global energy sector ETF. And one of the reasons for that is, a lot of the times investors who want to get exposure to that sector want exposure to that sector. They don't want to look back on their returns 6 months later and find out that, global energy's rallied 20%, but because the currency's gone the wrong way, they're back where they started. So that's really one of the reasons why you would consider currency hedging, is if you didn't want the currency, involved in your returns.
Yeah.
Nice.
So for a beginner investor who's thinking about, long-term 20, 30-year time horizon, does it matter, or how should they be thinking about that decision for like a broad index, so like the American S&P 500 or something like that?
Look, it can. A lot of the research says that it comes out in the wash, which is why a lot of people don't really take it into consideration. A lot of times people don't want to consider currency too much. It's one of those things.
Yeah. And then one more question on that. Are the fees different for a hedged or an unhedged ETF?
Marginally, but generally not meaningfully at all.
Okay. Is unhedged generally cheaper because you have to do less?
Slightly.
Okay.
Like single, what's your basis points? So
yeah, right. Okay, so very similar.
Very similar.
But hey, we hate all fees, whether they're large or small. So every little bit counts.
So, Adam, thank you for your time today unpacking the universe of ETFs. I think the key message is that regardless of where you're at in your journey, ETFs are certainly something that can fit into your portfolio. If you are a beginner investor, though, you can almost find an ETF that suits anything in terms of your investing goals, or if you want to be investing in different asset classes, different countries, different regions, different thematics, there's plenty of options available. So, I guess for more information on the products that you guys offer, betashares.com.au.
That's it.
Nice.
And that'll have all the information that you need. And, one of the other things, if you're starting out, we sort of pride ourselves on, our education, our collateral, our insights. So if you are trying to get more information on ETFs, you can you can look on our website, on our blog, and search, and you can generally find the information that you're looking for.
Nice.
Nice one.
Well, as always, a pleasure to speak with you. Thank you for your time, Adam. Looking forward to keeping in touch over the next whatever period of time. we're not going anywhere. I don't know if you're going anywhere.
No, I'm not planning on it.
BetaShares are always pumping out new ETFs bloody every second day. So
just really trying to build out that menu for everyone and give us plenty to talk about, so I can always come back in here and talk to what we're seeing and some ideas for investors. So thanks again for having us on. It's always a pleasure to come in here and talk to you guys.
Nice one.